Welcome to today's market report. European stock markets traded in a mixed fashion on Monday, with the heavyweight miners helping the UK market outperform after Friday's disappointing US employment data kept the dollar weak and commodity prices strong. DAX in Germany traded 0.2% lower, CAC 40 fell 0.1%, FTSE 100 climbed 0.2% to a 52-week high. The large cap miners have pushed higher on Monday, boosting the FTSE 100 index as metals prices rise, helped by the recovery of the US and Chinese economies, the two largest in the world, while stimulus plans target infrastructure and renewable energy in both countries. Rio Tinto stock rose 3.1%, climbing to an all-time high, while Anglo American stock climbed 1.3% and BHP Billiton stock rose 3.2%, both to 52-week highs. The airline sector weakened, however, with easyJet stock falling 2.6%, Ryanair stock dropped 1%, and British Airways-owner IAG down 1.6%, despite the UK allowing international travel to resume from 17th of May, as only 12 countries made its approval list. German biotech company BioNTech stock surged 9.5% after revealing plans to build a new manufacturing site for its vaccines in Singapore. US non-farm payrolls data on Friday showed jobs growth unexpectedly slowed in April, while in Europe, Philippe Lane, the ECB's chief economist, told French newspaper Le Monde that the unemployment rate in the bloc wouldn't turn to its 2019 level before 2023, and the Eurozone's gross domestic product will not turn to its 2019 level before spring next year. Oil prices strengthened and gasoline futures hit a near 3-year high after a cyber attack on a US pipeline operator resulted in a major disruption to US supplies. US crude futures traded 0.7% higher at $65.34 per barrel. The Brent contract rose 0.7% to $68.73 per barrel, while gasoline futures on the York Mercantile Exchange rose 1.4% to $2.1568 per gallon, climbing to the highest level since 2018 May before pairing gains. Gold futures rose 0.2% to $1,835.50 per ounce. On the FX front, the GBP-USD pair shoot to more than 2-month tops during the first half of the European session, with bourse now eyeing a move towards reclaiming the 141 round figure mark. The pair built on the previous session's post-non-farm payroll positive move and gained some strong follow-through traction on the first day of a new trading week. This marked the second consecutive session of solid gains and was exclusively sponsored by the outcome of the Scottish Parliament election. Sturgeon's SNP recorded its fourth consecutive victory and won on 64 seats. This, however, was a one shot of an outright majority and helped ease the UK political risks, which in turn seemed to have prompted some aggressive short covering around the British pound. The possibility of some trading stops being triggered on a sustained move beyond the key 140 psychological mark further contributed to the momentum. Bourse seemed rather unaffected and largely shrugged off a modest US dollar rebound from more than 2 months. The greenback found some support from a goodish pickup in the US Treasury bond yields, though lacked bullish conviction amid dovish Fed expectations. Friday's disappointing US monthly jobs report reaffirmed that the Fed will keep interest rates low for a longer period. The headline non-farm payroll showed that the economy added only 266,000 new jobs in April. This was well below consensus estimates, pointing to a reading of nearly 1 million. Adding to this, the unemployment rate unexpectedly edged higher to 6.1% from 6% in March. There isn't any major market-moving economic data due for release on Monday, either from the UK or the US. Hence, the market participants will now look forward to the UK Prime Minister Boris Johnson's statement on further reopening of the UK economy for some meaningful trading opportunities. Euro-dollar manages to leave behind the earlier dip to the 121.30 region and retakes the upper end of the range in the 121.70 to 121.80 band, or newly monthly peaks. Supporting the better mood in the European currency is the yields of the German 10-year bond gather extra steam and test once again the minus 0.2% area or multi-day highs. The US dollar nursed losses near 2.5-month lows on Monday as a disappointing employment report prompted investors to unwind their growing long positions in the greenback. The dollar index stood at 90.905, up 0.2% on the day, after dipping to 90.1. This is today's market news. Thanks for listening. We'll see you next time.